Okay, in this video I'm going to do the first 10 questions from the Spring 2013 final exam. If you can go through this final exam which your instructor has posted, and you should have, if you understand everything in this, you're in really good shape. It's not absolutely everything that's on the final for this time, but it's a great guide, and I think this final exam is a little tougher than the one you're going to see this time. Alright, so let's talk about the first two conceptual questions. Question number one, the answer is A, as in alpha, maximize shareholder wealth. That question in some form has been on every final exam since at least 2008, and I think even before then, and the answer has always been maximize shareholder wealth. The goal of a publicly traded, publicly owned firm is to maximize shareholder wealth. Question number two, what is a common size balance sheet? The answer is D as in dog, a balance sheet with all the entries divided by total assets. And I highly suggest you learn what a common size income statement is. Alright, so let's go to question number three. Question number three, we want to find the total cash. Alright, so if I'm looking at this, I need to fill in the total cash. And my first step is I need to prepare a balance sheet. I need to answer this as best I can as it goes along. So this is just writing down the balance sheet. You have to know an income statement and balance sheet, how to construct them. If you don't even show up for the final. You have to know how to construct a balance sheet and an income statement. Alright, so the balance sheet balances, so the total liabilities and equity is equal to the total assets, $74,700. Okay? So I need to get cash, so I need to know everything else on this balance sheet. I need to know the net fixed assets. In order to know the net fixed assets, I need to know accumulated depreciation. Well, what is accumulated depreciation? It is the depreciation that accumulates. So I'm adding up my depreciation from every year that the firm has been in existence. And last year, in 2011, the firm had $5,300 in accumulated depreciation. This year their depreciation expense is $3,900. That means their current accumulated depreciation is $9,200. So $9,200 for accumulated depreciation. Net fixed assets is gross minus accumulated, and that would be $54,800. Okay, so I know that the current assets plus the net fixed assets has to equal the total assets. That means current assets are $19,900. In order to make current assets $19,900, cash has to be $8,500. So for a question like this, a balance sheet has to balance. I can give you the information for everything else on the balance sheet except for one thing, and you should be able to figure out what it is. So for example, if we didn't give accounts payable on the new exam, what would you need to do? You would be able to find everything over here, find that this is $74,700, and back into that number. You just a balance sheet, like I said, balance sheet balances, and that's the way you have to answer that. Alright, accumulated depreciation, question number four, the answer I've already given is $9,200. Cash flow from operations, let's go with a different color here. So cash flow from operations, you start with net income. Net income in 2012 was given to be $4,560. Then you add depreciation, and here's where you make sure you got the difference in the depreciation expense and accumulated depreciation. They're two different things. That's $3,900. And then I'm going to have the change in accounts receivable. I'm going to have the change in inventory. I'm going to have the change in accounts payable and the change in accruals. So before I do any of this, before I write anything else, I write down what I'm looking for. I know if I add this up, that's going to be my cash flow from operations. Alright, so my accounts receivable went up from $6,000 to $6,600. The question is that a positive to the cash flow, or is that a negative to the cash flow? Here's the way to think about it. Last year somebody owed me $6,000. This year they owed me $6,600. They must have borrowed $600, so that's a negative. the inventory to me is an easier way to think about it. It also changed by $600. It went from $4,200 to $4,800. If I have more inventory, how did I get more inventory? I must have bought it, and that's in negative cash flow. Accounts payable went down by $300. So I owed somebody money. I paid them down. That's a negative for the cash flow. And accruals went up by $500. And I owed somebody $1,000 last year. I owe them $1,500 this year. I must have borrowed money. So it's $7,460. Alright, so the next question is what's the cash flow from investing? So I'm going to put that in. Let's go with some type of purple color here. Cash flow from investing. My gross fixed assets were $64,000 this year. They were $55,000 last year. The difference there is $9,000. But is that positive or negative? Well, the cash flow from investing, what happened, here's the way I want you to think of it, is you have $64,000 worth of plant, property, and equipment today. Last year you had $55,000 worth. You must have bought $9,000 worth of plant, property, and equipment. So the answer to 6 is minus $9,000. What were the dividends paid? Dividends paid in 2012. Well, the way I come up with dividends paid is I know my net income. My net income is equal to $4,560. Part of that I keep as retained earnings, and part of that I pay out as dividends. So how do I determine that? I know that my retained earnings from last year was $29,000, right? So you can look in your on your test. Retained earnings last year is $29,000. This year it's $30,000. So you must retain $1,000 of earnings. So this net income, you kept $1,000, you paid out $3,560 as a dividend. I'm going to stop right there, and I want to do cash flow from financing. It's not on this version of the exam, I know, but I want to make sure you understand it. So cash flow from financing, I take the change in notes payable, the change in long-term debt, the change in common stock, and common stock can come common stock at par and as additional paid in capital. We could also call this capital surplus, and then I subtract the dividends. So the notes payable decreased from 4,500 to 3,900. So it's a change of $500, and it decreased. You owed somebody $4,400 last year. You owe them $3,900 this year. You paid down $500. The long-term debt went up $500. You must have borrowed money. The common stock at par went up $400. So you issued new stock. That means your additional paid in capital also went up. It went up $600. That's a positive. The dividends we've already determined, minus $35.60, and that comes out to be a total of minus $25.60. The reason that's important is I can look at these numbers, the $7,400 from operations and minus $9,000 from investing and minus $25.60 from financing, and it looks like my overall change in cash was minus $4,100. My overall change in cash was minus $4,100. Does that make sense? Well, cash last year was $12,600. So cash last year was $12,600. This year it's $8,500. It went down $4,100. At this point, I feel really, really good that I've got questions 3 through 7 perfectly correct. All right, so if any of that was not easy for you, it's got to be easy by the time you get to the final exam. So I recommend that you go back through this again. I recommend that you go back to the book and look at the videos where we did this type of stuff, and make sure that you get it. If you have any questions, go to your instructor. All right, I'm going to pause the screen and clear some of this stuff off. Okay, so now let's look at question Question number 8. Question number 8, what's the return on equity? So return on equity, you can look at your formula sheet in the back and see that return on equity is net income over equity. And you know net income is 4,560 because that's given to you. Now your question is, what is equity? Well, equity is this. It's going to be the $30,000 retained earnings plus the $2,400 common stock at par plus the $9,600 additional paid in capital. And you just have to know that the balance sheet, this is the equity portion, everything else is debt, whether it's long-term debt or short-term debt or some type of liability, and of course the other side is the assets. So this comes out to be 0.186, which is 10.86%. Alright, question number 9, how many shares are outstanding? Well, each share costs 20 cents, so we have $2,400 worth of shares, and the shares cost 20 cents each, so the total value of those shares is $12,000. If that confuses you, think about this. You have $2,400 worth of candy bars. Each candy bar costs 20 cents each. How many total candy bars do you have? Well, they're 5 for $1. You got $2,400 worth. It's 2,400 times 5. Alright, now let's look at question number 10. Question number 10 is, given the net profit margin, what were sales? Well, I know my net profit margin is equal to net income over sales. I have a formula sheet that tells me that. The net profit margin is 9.5%. Net income is 4,560. Sales is what I'm looking for. So just solving algebraically, I can come up and find that sales is equal to 4,560 divided by 0.095, which is equal to $48,000. So that's questions 1 through 10. Like I said, just make sure you understand thoroughly each one of those, and once you understand that part, go back to your midterm in accounting and your quizzes from this accounting portion of it, and make sure you understand each aspect. Those first 10 questions should be gimme questions. I hope you get them all right.